Shadow Binders is back in stock on shopclownfish.com. That's shopclownfish.com. And now on with the show. Hey guys, welcome back to Clownfish TV. This is Neon, and we're going to talk about BuzzFeed. BuzzFeed and their never-ending quest for more money, to stay solvent, to stay in business. BuzzFeed, which hasn't been doing so hot in the last couple of years, is now trying to shake down investors for more money, trying to rebrand itself as a tech company and not just a garbage tier blog. And it's not going so well for them. We didn't think it was going to go well for them, but it really is not going well. We're going to talk about that. This article that came out last night that NBC Universal expects to lose $100 million on BuzzFeed's plan to go public via an SPAC, SPAC. That would be sort of a special company set up just to get venture capital. As I understand it, that is the new buzzword now in tech investing. And BuzzFeed has tried to rebrand itself as a tech company in the last year or so, claiming that they sell technology like BuzzFeed branded vibrators and sex toys. I'm not kidding. That's why they're a tech company. So we're going to talk about that. Before we get into it any further, please subscribe for more pop culture news, views, and rants, guys. We're over 231,000 subs. Thank you so much for the support. And yeah, I have to give a hat tip to Becky, who posted this on Twitter. I didn't even see it, and we actually are rap subscribers, but I didn't see this one. So thanks, Becky. BuzzFeed's kind of interesting. BuzzFeed, I think you can trace most of the garbage tier reporting and the transition of blogs being, somewhat reputable news outlets or opinion sites into becoming clickbait. BuzzFeed, I think, is behind a lot of that. And, they've been losing relevancy over the last couple of years. They've had some layoffs. They bought the Huffington Post, and I think they had to do a buyout with stock or something. It wasn't even worth money. And then they laid a bunch of people off from the Huffington Post. And now they're trying to shake down venture capitalists, investors, to stay in business. So we'll see how it goes. But it doesn't sound like it's going very well. So this is NBC Universal expecting to lose $100 million on BuzzFeed. NBC invested $400 million in 2015 and 2016 in the company. Disney did this with Vice. And Vice, I think, is looking to do the same thing, shake down, investors for venture capital. And Disney lost a bunch of money on them, on Vice. They lost about half a billion dollars because these blogs aren't worth investing in. I mean, the best case scenario that you can hope for is that these blogs, stay self-sufficient. They're self-sustaining. You pay your writers, you get some ad revenue, but, companies like BuzzFeed and Vice, they want to be more. They want to be like the WeWork of blogs. They want to be a multimedia company, and they want to have a little empire with their, video productions. They're all pivoting and, doing Hollywood stuff now. And now they're tech companies because they sell dildos. I mean, come on. Anyway, NBC invested $400 million and they lost money. So NBC Universal expects to lose about $100 million in its investment deal with BuzzFeed, which in June had planned to go public via an SPAC. Digital publisher BuzzFeed's plan was to merge with a special purpose acquisition company, but NBC Universal leaders were disappointed at BuzzFeed's value of $1.5 billion, which is below where it was in previous years, because they're damaged goods. BuzzFeed's been laying people off. They're not sustainable. Most of the blogs that we talk about with these reporters and their garbage tier reporting and their hit pieces, they're way overpaid too, by the way. I mean, you look at what some of these gaming journos are getting, it's just absolutely insane. Like, some of these gaming journos are making more than like legit professionals with advanced degrees, to write garbage articles about video games and toxic gamer culture. But they're not sustainable. They've been living off of venture capital for years. And usually you have a 5 to 8 year cycle. And oh boy, here it comes, 2015, 2016, we're up on that 5 year mark. And now they're looking for more money. So the Wall Street Journal reported on this, and the deal NBC Universal could be facing a loss of $75 to $100 million. depending on the stock price, the report said. BuzzFeed was seeking a $1.5 billion valuation based on a projected profit of $117 million by the end of 2022. Most of it was pitched as coming from e-commerce revenue. Okay, so we talked about this in a previous video. This is crazy. Their e-commerce revenue, a lot of it is Amazon referral, affiliate links. Like, we've got a company the size of BuzzFeed, and they're not even doing like a whole lot of direct ad sales. They're not selling a lot of their own merchandise. They do have BuzzFeed branded stuff, like, Geeky bought a puzzle and it turned out it was a Tasty branded puzzle. It was a BuzzFeed thing. Of course, we know they're selling sex toys too. And here it is, they're selling sex toys. But they said the e-commerce, what they consider e-commerce, is affiliate links from Amazon. The site regularly uses affiliate links to get partner revenue from Amazon. In 2020, commerce represented 13% of overall revenue, and by next year it should be 23%. So a quarter of BuzzFeed's revenue, if I'm reading this correctly, 1/4 of BuzzFeed's revenue is just Amazon referral affiliate link revenue. Like, any mom and pop blogger can set up an Amazon affiliate account and make money off of selling products, skimming off the top. I mean, this is not a viable business model. What happens if Amazon decides to discontinue that program? BuzzFeed is completely screwed at that point, right? Because they're not really, I thought that they would be selling more stuff through their own store. Like, people were lining up to buy BuzzFeed t-shirts and BuzzFeed hats, and no. Amazon referral links. Again, anybody can do that. Why would you invest? Why would you invest hundreds of millions of dollars into a company that's making a good portion of its revenue off of Amazon referral links? The valuation was 13 times the profit, which was more in line with a tech company rather than a content publisher. Again, they're trying to pivot. Virtually all companies are cloaking themselves in a mantle of tech, said Peter Sathi, founder of advisory firm Create TV Media, previously told The Wrap. The market rewards that with higher valuations and higher multiples. It's certainly a key financing strategy to position yourself more as a tech company than a media company. BuzzFeed is fundamentally a content company, but serves up content in a tech transformed world. No, they're a blog. They're a glorified blog with overpaid content creators, overpaid video personalities, living off of venture capital and living off of Amazon referral links. I mean, this is crazy. In April, the deal was approved when BuzzFeed CEO Jonah Peretti made NBC a guarantee of concessions that still came with a loss of $100 million, people familiar with the matter said in the Wall Street Journal report. In order to ink the deal, Peretti agreed to terms that would put the burden on his company to raise its shares after the merger. According to the report, he had offered a portion of his stake to NBC Universal if the shares did not reach their target. The frenzy of SPAC deals in recent years is now pointing to a cooling off period. Some investors say BuzzFeed's current SPAC deal is part of a trend revealing that many companies merging via SPACs have seen shares dropping. This could lead more investors to proceed with caution and possibly more deals falling through. Yeah, as far as I know, the ink hasn't dried on this deal yet. You change strategies sometimes to capitalize on the force of the day. Here's an opportunity to capitalize on that in this new scenario if they're not too late to the party. BuzzFeed might be too late to the party and they're damaged goods. And look at what happened with Gizmodo, with Gawker. Okay, Gawker got sued into oblivion by Hulk Hogan. Now Gawker's coming back, but in zombified form with a handful of contributors. They're nothing like they used to be. And Gizmodo, which was part of the Gawker group, got sold multiple times. And every time it gets sold, it becomes less and less valuable. People get laid off. These websites really aren't worth that much. And I think people are starting to realize that BuzzFeed and Vice and Vox, that these companies aren't worth much. I'm sorry, when a quarter of your revenue comes from Amazon affiliate links, you're come on, you're not a tech company. You're not a tech company. You're a blog. NBC Universal had invested $400 million in BuzzFeed throughout 2015 and 2016 as appeal from outside investors continued to grow. It's all smoke and mirrors, guys. All of it. Watch the WeWork documentary on Hulu. It's the same thing, just blog instead of shared workspace. It's all smoke and mirrors. The investments were intended to be focused on viral news and video content on the platform, with the aim to also bring BuzzFeed into the company's broadcast properties. Over the years, BuzzFeed's growth has been driven by its millennial-focused content and approach in developing viral digital content such as quizzes, its own headline automation tool. Seriously, so that's how they come up with this shit. We were joking about comic book resources having a very by the numbers automation, when it comes to its headlines, like, 5 reasons that Captain America might be gay and 5 reasons why he's not. And apparently these bigger blogs have automation tools. That's interesting. Partnerships with e-commerce companies. It's not a partnership. They're an Amazon affiliate. Anybody can be an Amazon affiliate. That's not a partnership. Its plans to go public also include acquisition of Complex Networks, another damaged brand, another brand with strong reach among younger consumers. They bought the Huffington Post, of course, too, and they laid a bunch of people off. As that growth slowed, BuzzFeed found itself slashing costs and investing more into e-commerce efforts and licensing. Last year, the company's revenue was $321 million, which for a blog is pretty damn good money. But again, how much money are you spending? What's the long-term viability of this company? Analysts said in the report they expect to see many investors behind SPAC deals pull out and avoid loss if they see shares trading below their listing price with those companies. So here's the deal. BuzzFeed's damaged goods. This is a Hail Mary pass. It doesn't matter if they're making $300 million in revenue, if their expenses are higher than that, and if they're on the decline. Again, this is one of those companies that has a bunch of fancy offices and a bunch of overpaid people. Lots of people working at BuzzFeed making ridiculous 6-figure salaries. Lots of expensive offices being rented. And a quarter of their revenue is supposed to be coming from Amazon affiliate links. I don't think BuzzFeed is going to be around long term. I think they're going to wind up a lot like, Gizmodo, Gawker, where they'll exist in some form, but they will be a shell of what they used to be. And again, Huffington Post. People thought the Huffington Post was going to be around forever. And just one day they're like, yep, nope, we're out. We're merging with BuzzFeed. We're out. We're done. And here we are. So we'll see. If this doesn't work out for them, I don't think they're going to be around much longer. I mean, I don't think they'll disappear in a year or two, but 10 years from now, I would be very surprised if BuzzFeed is still a thing. Or if they are, it's going to be like MySpace. Like, oh yeah, it's still around, but does anybody care? Nobody cares. Going to wrap it up. Please subscribe for more pop culture news, views, and rants. We'll talk later.